Hello friends, my name is CA Nishant Maheshwari and today I will be speaking about my potential multi-bagger bet. Before disclosing the name of the company, let me make one disclosure that I am not registered under SEBI, so the stock ideas which I am putting here will be just my views and based on the past facts and figures. So people who require to invest in such companies should vouch for the authenticity of the documents and facts and figures before investing in such stocks. So, my potential bet is from a sugar sector. Before starting with the fundamental and overview of the company, we have to see how value chain of sugarcane works. Suppose you have 1000 kg of sugarcane and you want to start sugar production. Then you can expect the following valuable products: 100 kg of sugar, 300 kg of bagasse, which is further used to create 660 kg of steam. From 660 kg of steam, we can produce power at the rate of 130 kilowatt per hour. Out of 130 kilowatt per hour, 30 kilowatt per hour is used internally and the remaining 100 kilowatt can be used to sell to the power distribution companies through power purchase agreement. The next product will be 45 kg of molasses, which is used to produce 11.25 liter of industrial alcohol, and if further processed, the same can be used to produce ethanol. Then comes the press mud of 30 kg, used to produce 30 kg of biofertilizer. So, from 1000 kg of sugarcane, you are getting sugar, baggies, which is used for electricity production, that is power, then molasses, which is further used to process and if further processed, we can get ethanol from it. Then comes press mud of 30 kg, which is used for biofertilizer. The name of the company is Balrampur Chini Mills. Balrampur Chini Mills was incorporated in 1975. The company has crane crushing capacity of 76,500 tons per day, plus the distillery capacity of 360 liters per day, which has now been increased to 450 liters per day, and a saleable co-generation capacity of 163.20 megawatt. Overview of the product line. It has sugar, at present 76,500 tons crushing capacity per day. Then comes molasses, that is B heavy molasses and C heavy molasses. Then comes alcohol, which is 360 kiloliters per day, which has been further increased to 450 liters per day. Then comes ethanol. At present, they are producing like 11.88 crore liter of ethanol, which is produced through C molasses, B heavy molasses and pure cane juice used for sugar production. Then come baggies, and through baggies it produces power. The total production of power is 262.41 megawatt, out of which 99.41 megawatt is used for internal operations, and then the remaining 163 megawatt is saleable co-generation capacity. Now comes the allocation of the revenue. Earlier, in 2017-18, as per the annual report, the co-generation and the distillery accounted for 15% of the total revenue, which has now been increased to 30% as per the Q3 result basis. All of the above product line which I mentioned in the video are well integrated, that is crane crushing capacities are complemented by ethanol and co-generation capacities. Now the capacities location. At present, Balrampur Chini Mills have 10 operating plants. The location of the plants are in UP, that is Balrampur, Badhanan, Tulsipur, Hydergarh, Akbarpur, Mankapur, Rozagaon, Kumbhi, Guleria and Maizapur. All the 10 plants are located in the cities where there is surplus crop production and the landed cost of the sugarcane is lowest. Just like Lakhimpur Giri, where Bajaj Hindustan operates, it produces one of the highest level of sugar crop. Similarly, Saharanpur, Muzaffarnagar. So these plants are well located in those cities where the crane production are in excess and they can easily procure through farmers. Now, recent developments which makes sugar companies interesting. First development is a recent one, that is the raising of minimum support price from 29 rupees per kg to 31 rupees per kg dated 15 to 2019, which can benefit 4 to 5% margins of the company. Then during the month of October 18, the Indian Sugar Mill Association has forecasted a drop in sugar production from 35.5 lakh ton to 31.5 lakh ton. Now, the same forecast has been further revised to 2.5% lower, that is 30.7 lakh ton. Interesting to note that this forecast is considered after taking into account the estimated diversion of 5 lakh ton of sugar production into ethanol production through B heavy molasses. Now, third one, the expectation of export, that is 30 to 35 lakh ton of sugar in 2018-19. Presently, the minimum import export quota is around 50 lakh ton. That is MIEQ is around 50 lakh ton with export subsidy. The same is visible. The export is very much visible through export to China as well as Iran and in other countries. The fourth factor, one of the major factor which reduces the cost of funding for such sugar companies is interest subvention scheme with effect from 1st 7 2018, resulting into benefit of rupees 32 crore for Balrampur Chini mills, which they have disclosed in con call of Q3. Then fifth factor is soft loan to the extent of 10,540 crores, which is to be given in tranches to clear the cane arrears. For the same, the center will bear interest subvention to the tune of 7 to 10%, that is 553 crore to 1054 crore for 1 year. Then sixth factor which has changed the dynamics of all the sugar sector is ethanol blending policy. At present, after initiation by the Government of India for cleaner fuel, the ethanol blending in petrol is increased to 4% from 2% in case and 0.2% in case of diesel in the year 2018. Further, the prices of ethanol have been hiked by rupees 25%. The hike in the price can be very well seen through floating of tender by OMCs for procurement of ethanol. At present, the OMCs have floated the tender for procuring ethanol to the tune of 6,58,522 kiloliter from cane juice and B heavy molasses and 26,34,086 kiloliter from C heavy molasses, which is valid from 1st December 2018 to 30th November 2019. Due to the hike in price, the realization from B heavy molasses will be rupees 59 per liter and rupees 51.46 per liter from C heavy molasses. In sugar term, it is equivalent to rupees 35 per kg. The government is further planning to double the ethanol blending to the tune of 8% in 2018-19, which is likely to be postponed to next year due to the decrease in dollar prices and stability of crude. Now, what has been the game changer for the company? The expansion of ethanol capacity. The expansion of ethanol capacity from 11.88 crore liter annually to 18 crore liter. The company will be investing 210 crore in Guleria plant. The expected time of commissioning of the plant is December 2019. Recently also they have commissioned the plant in December 2018, which will be totally reflected in Q4 result, because in Q3 only 1 month revenue will be taken into consideration. The ethanol in terms of margins contribute around 75% at present, resulting in 226.67 crore of profit after tax, and in terms of EPS it's approximately 9 to 10 rupees per share. The further increase in MSP from 29 to 31 per kg will improve the margins by 4 to 5% of the company. Now talking about the financial position of the company. This company is strongest in sugar sector. The present market cap of company is around 3000 crore. The market price of the share is 132 per share. The return on capital employed is 12.83% annually and return on equity is around 13.89%, which will improve by 35% at the end of the year, that is financial year 18-19, due to the improved realization. When it comes to 3 years return on equity, it is like 25.90%. And why it is 25.90%? Because of the upward trend of sugar cycle in the financial year 2016-17. At present, the promoter holding is of 40.98%. Since sugar itself is a cyclical and major domination is made by government policies, so 10-year sales and operating margins cannot be considered as a parameter to look into the financial strength of the company, because there will be one upward cycle and one downward cycles. What drives their financial is the borrowings, then the landed cost of the crop, that is the procurement cost. Then comes the inventory surplus, which is again regulated by the government of India through their policies. And then next is the cash flows. I consider cash flow as the most important and critical factor, because major siphoning can be only understood through cash flows. At present, the free cash flow of March 2017 was rupees 217 crore. But remember, the cycle was an upward trend. So 217 is considered as an exceptional item for me at that time. Then in March 2018, when the downward trend started, the free operating cash flow, that is the cash flow from the operating activity less the investment in fixed asset, was 1045 crore. Until September 2018, it is like 748 crore. We are in the midway and we are generating like 748 crores through cash flow from operating activity less the investment in fixed asset, which has been reflected in December quarter result. Probably they will generate around, as per my estimation on conservative basis, it will be like 1400 crore from cash flow from operating activity, with the proposed plan of 210 crore in investment in fixed asset for expansion of ethanol capacity to the tune of 7 crore, which will likely to be commissioned in 2019. So you have to see the WIP in order to see the expansion, because the ultimate capitalization in fixed assets will be done after the WIP is commissioned. So free cash flow from operating activity will be, after considering 210 crore investment in Guleria plant, it will be like probably like 1200 crore approx. The company's surplus sugar production, which I was talking like in 2018, March 2018, it was like 1802 crore due to the government policy on sugar, and it was it was having a drastic effect on the working capital of the company. But still the company has survived the same, and the surplus production that is reflected in inventory to the tune of 1802 crore have been reduced to 1011 crore. That is more than 800 crore, approximately 800 crores have been realized. The debtors, that is the receivable, whenever you sell, you cannot realize immediately in cash. You have to book the entry in accrual basis. So debtors are like this, and receivables have been reduced from 182.21 crore to 142.94 crore. That is further improvement of 40 crore in cash flow, and the same has been invested in the treasury of investment, and ultimately yielding like 8% return. In the whole sugar industry, mark my point, in the whole sugar industry, Balrampur Chini is the only company which is having nil debt. That is, in September, it was having like more than 360 crore debt, which has been repaid by 1012 in the last previous year. So all in all, this company has the lowest debt, Virtually it's debt free as on September 2018, but right now it is totally debt free company. Plus, it has lowest cane arrears of rupees 600 crore to 700 crores. That is approximately 3.5% of the total cane arrears, where the companies are fighting and representing to the government for reducing their cane arrears. This company has the lowest one, and plus they repay their dues within 20 days, which is reflected through other current liabilities. At present, their debtors days are 25 days considering September 18 result, which will be reduced to 10 days due to better sugar inventory, ethanol and distillery segment realization. Similarly, the inventory turnover will be reduced to 1.5 times from 2.11 times as on September 18. This will result into surplus cash to the company to the extent of 800 crore, and at present as on September 2018 the cash and cash equivalent is more than 300 crores and investment is approximately 120 crores. So all in all they have 420 crores of cash in their kitty, and the same will be utilized for capex plan to the tune of 210 crores. So they are generating revenues and cash flows internally, and they are funding internally for their capex. They are not depending on any soft loan even. So the loans and advances, which is likely to be a factor for ascertaining the siphoning of money, because inventories and loans and advances are very critical factor for analyzing the siphoning of money. It is at present around 1.38 crore, which itself is a evidence through their cash flow, and the transparency in the utilization of fund is very much visible. It is further seen that due to this robust financial, the company has came into the position where even in the worst case, this company can generate around 300 crores of EBITDA without any effort and without any production of sugar. Now coming to the forecast which I have made from 1st December 2018 to 30th November 2019, because 1st December was the day where the dynamics of sugar industry completely changed, though the smell can be seen from July 2018 onwards, where the subvention scheme was announced. So coming on to the revenue for next 1 year from 1st 12 2018 to 30th 11 2019, I expect that ethanol production will be around 11 crore, and the management has also confirmed in the con call that they will be tendering around 11 crore liter of ethanol. So the EBITDA will be 344 crores considering 75% of the revenue margin which the management has confirmed, and the management has also said that the molasses itself is procured through transfer price. So at present they are earning 75%, and they don't think that at least for 2 to 4 quarters the same will be reduced. So coming on to the ethanol, 11 crore liter will fetch them EBITDA of 344 crores and profit after tax of 226 crores. Since earlier this company was incurring losses, so the same was set off and they were paying MAT, minimum alternate tax, to the tune of 18%, and now the tax rate will be more than 34%. So considering that, I made a projection of profit after tax of rupees 226 crore. If converted into EPS term, it comes out around 9.84 per share. Then comes the sugar, that is the domestic sale, not the export one. I believe that they will be foregoing around 4 crore kg of their production, and they will end up with like 85 crore kg of production, and which will generate EBITDA, that is earning before interest and tax, to the tune of 381 crore, and the profit after tax will be 251 crores. And if you convert the same in terms of EPS, it will be approx 10.89 per share, rupees 10.89 per share. Then comes the power sector. The company is very much confident of selling 70 crores unit, and they have confirmed the same in the con call. And one person asked that why they are very much behind their target. So they replied very diplomatically that earlier also they were far behind their target in December 17, but later in March they have recovered their target and they met their target before time. So similarly, the company is also confident of selling 70 crore units, and in terms of EBITDA, it will be like 140 crore, assuming 2 rupees per unit is the revenue margin, and in terms of profit after tax, it will be around 92 crore. And when you convert the same in EPS term, it will be like 4 per share. Now coming to the export, since there is a cap limit imposed by the government, so they will be exporting around 4.9 crore kg only, and the same can be also verified through con call of Q3. And if you calculate the EBITDA, it will be lower, but the government will be providing certain incentives for export. It will be like 9.8 crore in terms of EBITDA, and the same is like 6.44 crore in terms of profit after tax, and if you convert in terms of EPS, it will be like 0.28 per share. Now overall EBITDA for this 1 year, that is from 1st 12 2018 to 30th 11 2019, it will be around 874.80 crore. The profit after tax will be around 575.44 crore, and the EPS will be around 25 crore. Further, taking the other income, because at present as on 30th September 2018, their investment is around 120 crore, which will further increase to the tune of 250 crores. And on a safer side, I assume that other income portion will be 23 crore in terms of EBITDA, and profit after tax on other income will be 15.10 crore. And if you convert the same in EPS term, it will be like 67 paise per share. So all in all, the total EBITDA after considering the other income will be 897.80 crore, roughly around 900 crore approx. And then profit after tax will be 590.54 crore, that is roughly around 600 crore. And in terms of EPS, it will be around 25 to 26. Giving a PE of 8 and 9 maximum, not 10, 8 or 9. The market price, the true value of the company comes at 205 to 231, which I believe they will achieve within 6 months. But on a conservative note, people should partially book their profit at around 190 or 180 level and sit on the 50% of the share to get further future return. And they will be definitely paying dividend. So friends, as a disclosure, I have invested around 2000 shares. Me and my family holds around 2000 shares, and today I bought 1000 shares at 130 rupees. So I believe that this share can generate more than 50% appreciation on your wealth. And if you hold for long-term story, like ethanol is structural change, and company and country will be moving towards cleaner fuel, so this has a lot of scope. But considering the cyclical factor, people are advised to book at least part of their profit at around 190 level and sit on the balance shares, so that your cost comes at around 70 rupees. So thank you very much. If you really like my video and my analysis, do subscribe my channel in order to get the further updates. Thank you so much.